What is up, X and YouTube? This is insane. I have never used StreamYard before myself, so give me one second to let everyone know that I'm live in the Discord. How is everyone doing on this Tuesday night? We got some exciting price action on BTC and literally in the entire crypto market. So let me let everyone know that I'm live. One second, guys. If you're not in the Discord, make sure you guys go and join the Discord server. It's full of people in there posting about memes, charts, and everything. At everyone, I am live on YouTube and X. What is up, Crypto 420? What is up, Vision? What is up, Peter? What is up, Dave? What is up, Marvin? How are you guys liking the setup? This looks pretty clean, in my opinion. This looks pretty clean. What is up, YouTube? What is up, K3 Peak? Yo, K3 Peak, I actually sent you a private message in case you thought I was a scammer. I sent you a private message, brother. What is up, Elliot? What is up, Floor Chambao? Man, today was an exciting day. Today was an exciting day. We got some good price action on crypto. We are moving up. We hit that resistance that we were talking about. What is up, Chappelle Gate? How are you guys liking the layout? Let me know how you guys like the layout. Let me know if my voice is clear to all of you. This is a new environment, so just making sure everything is good before we dive deep into the charts because, man, we have a lot to talk about. We have a lot to talk about, literally. I got too many things to say. Looking juicy, quality is good. Legend Lars is live. Let's go, guys. Let's go. Hello, what is up? What is up, Nif? What is up, ZGBTV? Man, how have you guys been today? How have you guys been today? The setup leveled up. Man, I've been working. I've been working. When swing long Bitcoin? Well, we got to watch out. We're not in a place where we want to have swing longs. You want to have swing longs from lower. You want to have swing longs from lower. What is up, Tahir? What is up, everyone? Didn't see the DM, just checking now. That's all good. Study TCT going live, setup upgrading, BTC hitting quarterly low. Guys, study everything, bro. Study everything. Okay, we're just gonna dive straight into it. We're gonna dive straight into it. Let's talk Bitcoin. Let's just talk Bitcoin first, and then we're gonna dive into all the juicy altcoins. So, talking about Bitcoin, we had this massive macro reaccumulation. I have been talking about this macro reaccumulation forever, okay? And you guys can fact check me, but literally, the moment this range started forming, I told everyone on public, on live, on the Because Bitcoin stream that I am 100% convinced that this range is going to break towards the upside. I'm 100% convinced, but why? Okay. Why was I that convinced? Because I'm still that convinced. So, looking at how we actually started this low, okay, looking at how we actually started this range, we got that move up. Okay, we had the aggressive move up, making higher lows and higher highs. And in an uptrend, you pull your range from top to bottom. Okay, you pull your range from top to bottom. And all of this is explained, all the market structure rules, all the range rules is explained in my mentorship that is on YouTube for free. Guys, if you haven't checked out my mentorship, I have made a full on course bringing you from a trader with no experience, even giving you an introduction to trading view, all the way to becoming an advanced profitable trader. It's on my YouTube, and the link to that mentorship is in my bio. Now, we were trending up, so we pull our range from top to bottom. So we have our range high, we have our range low, and we got that move towards the equilibrium, confirming our range. And from there, we got a range low deviation. And after that deviation one, we extended that range low to our deviation low, and then we got that second deviation. Now, what this is basically a TCT Model 1 reaccumulation schematic where you're deviating the low and you're not deviating your high. This is indicating that they're actually trapping people into thinking it's going to break down, filling those breakout shorts with their longs, grabbing that liquidity to reverse price. And we got the move away from it, right? We got that move away. However, we just had a very, very aggressive move towards the upside. Like this move was a 200% move in only 200 days. We basically went straight up with only one little, stopping point in between, which was right here. So we could have expected this range to last a bit longer. So what happened is that in before actually mitigating and taking that range high, we started a range in the upper section of our bigger range, and from there we distributed down. So we got that one, we got the two, and the three wasn't really defined, but we did get the significant move towards the downside. So this Model 1 reaccumulation did give us around a 27% move towards the upside, but it wasn't enough to actually break through. It needed more time. So what happened from there is that this low time frame schematic actually went over into a high time frame schematic, okay? Where we just follow that local downtrend, making lower highs and lower lows, just like this. And in a downtrend, you pull your range from bottom to top, and then you get this new range that we have been in for over 167 days, right? So we got that range low, we got that range high, and then we got that deviation one. Okay. After deviation one, yet again, we move our range low to our deviation low, and then we get that deviation two. Having the same pattern. So this is the same pattern, right? This is the same pattern that we saw over here in the beginning, now just on a bigger scale. But there is one massive difference. There is one massive difference that this deviation right here has compared to all the other previous deviations. And that is that this deviation actually mitigated demand. So if you go on a higher time frame and you follow that structure up, you have higher lows and higher highs. Okay, you have higher lows and higher highs, and right here on that higher low and that higher high, that is basically structured demand. Okay, it's a higher low for a higher high. It's a sell to buy. Okay, it's a sell to buy, a V-shaped recovery indicating that market makers filled their longs in here and were ready to push price higher. And when price comes back to that area of demand, you can expect those same market makers who push price higher to protect their positions and make price go higher. And this deviation was the only deviation of all the three here that actually mitigated demand. And therefore, I'm so confident in saying that this range low is not going to get taken because there's no reason for price to come lower because we mitigated demand on a macro scale. Okay. So knowing that we have that Model 1 reaccumulation schematic where this low is safe, it again took even more time because what price ended up doing is actually coming back for our extreme liquidity. And for the people that have watched my videos for a while, have watched my course on YouTube, know that for a valid third tap of the Model 2, you need to grab that extreme liquidity. So you kind of had the Model 1 right here with the 1, 2, and the 3. And then before going higher, it actually needed to come back down one more time to sweep that extreme liquidity. And this is exactly what we were talking about when price had that PO3 formation. So right here, everyone got way too bullish, right? Everyone got way too bullish, thinking that this was actually going to be a market structure continuation following this higher low for the higher high. But instead of having that market structure continuation, this was a PO3 that I posted publicly. And then from there, we got the reversal. And I told everyone, hey, I'm expecting this PO3 to just mitigate demand or sweep liquidity to then reverse. And that is exactly what we got. That's exactly what we got right here. Okay. We swept that extreme liquidity. We swept that extreme liquidity, and then we broke structure towards the upside right here on that break of structure. So to confirm a full rotation back up, you need to identify that this is your top three and this is your top four, basically. Talking about this 1, 2, 3, 4, where Model 1 goes over into the Model 2. And to confirm that this low is safe, you need to identify structure between the highest point between tab 3 and 4 down towards your fourth tab low, which is this low. So identifying our market structure on around like the 4 to 3 hour, you can kind of mix them. You have lower highs and lower lows. Because I want you guys to understand why I make the post that I do. This was a wick. A wick does not count as a higher high. It's basically a liquidity grab, and you sometimes can even expect a reversal back down. So we got the lower high for the lower low, and right here we got that break of structure. And since then, we have just been on the right side of the market. Okay. So we got that break. And because of that break, I told everyone, like, yo, guys, I'm expecting, right? I'm expecting a higher low for a higher high because previously we had lower highs and lower lows. Then we got that break of structure confirming a higher high. And then for the higher low and a higher high again. So you can see the change and the shift in market structure from lower highs to lower lows from a higher high. And therefore, also expectational order flow would be a higher low for a higher high. And the thing was, we had no resistance here. There was absolutely no resistance. There were people talking about potentially this being a one, there were people talking about this potentially being a one, a two, and then a three. But I told you guys, whenever you have a one, two, three, but the one and the two did all the work because this was that PO3 formation we were talking about earlier, I'm not expecting that third tap to do something. And either way, there was not really resistance up here. There wasn't really resistance. The only resistance that we truly had was this 4 hour supply zone in here. Is this 4 hour order block. You can identify it right here. Is this last up candle before having that expansion towards the downside, leaving that fair value gap inefficiency right here. They're also making it a valid order block. We call it OBIF, order block with an inefficiency. And not only was that our order block with an inefficiency, we also had the confluence of our volume profile. Because if we check our volume profile, you can see right here our volume area high, which is kind of the range high and the range low of the volume in the range, was also right there. It was right there. So we were expecting a consistent rotation up from 58.4 all the way to 66. And from there, we were expecting that rejection. Okay. And the funny thing is, guys, you need to pay attention to pattern behavior. You need to pay attention to it. It's the most important thing in trading because just like right here, we had that range and we had the manipulation and we had the expansion away. Just like we had the PO3 right there, the range manipulation expansion, the exact same thing played out again right here. You had your range, you had your manipulation coming into that block, thinking that people thinking this range was going to break towards the upside, but it was technically just a deviation, and we got the expansion away from it. Expansion away. So they gave you guys the same playbook twice. That's why it's very important you understand pattern behavior. The thing is, guys, we always need to identify our high time frame structure within the range. And when you're ranging, the most important high time frame structure is just the high time frame structure from the most recent range rotation. So, knowing that we are in a confirmed accumulation schematic, you go on the high time frame like the daily and you check, okay, this is the most recent rotation from low to high, which is very important to us. What is our high time frame structure from this low to that high doing? And you can clearly see that we have a low, we have a high, and we have a higher low, and we have a higher high. Following the six candle rule. And again, guys, the six candle rule, the market structure rules, they're all explained in the free mentorship on YouTube. Unless this low gets broken, there is truly nothing to worry about because we're still in that high time frame uptrend from the most recent range rotation. So when price comes here, expectational order flow will simply be a higher low for a higher high. And that's why I gave you guys two POIs to watch. I gave you guys two, and one of them actually ended up working out. One of them was this 30-minute order block right here. You can see again is that last downwards candle before the expansion away. And it wasn't just an order block, okay? It was actually backed by this Model 1 accumulation schematic that also ended up going over into that Model 2, that nice round the bottom effect. And we left that 30-minute demand zone right here. So it was a nice little market maker order block, as I like to call him. And from there, we got that first bounce. Okay, we got that first bounce. And right here is where we catched our long. Okay, we catch that long right there. It was a beautiful long, and we rode it up as high as we could have taken it right here. We got that Model 1, and the Model 1 was basically also just an accumulation schematic in there. There was just one issue. There was one issue, and that is that identifying our structure from top to bottom, we failed to break back to bullish. Okay, we failed to break back to bullish because, like I just said, a wick is not a higher high. A wick is simply a liquidity grab, and you can expect a rotation back down to this low if you break market structure from this low to that high. Okay, so whenever you wick your high, you have to identify what is your market structure looking in that move up towards that wick. And if that market structure breaks back to bearish, you can confirm a rotation all the way back down towards that low. That's exactly what we got right here. Again, all these market structure moves are explained in the mentorship. So what happened is we got the move down, we got the move up, but we weren't ready yet. Okay, we were simply not ready yet. And price came back down. Now, that is totally fine. That's totally possible, guys. It's totally possible. The thing is, we need to be aware of just a bigger range formation. We have been loving the bigger range formations, right? Absolutely loving the bigger range formations. So, identifying our high time frame structure now, because going on the high time frame, this ends up being one pool, we can again see we're in a local downtrend, in the higher time frame uptrend, and we can pull our range from bottom to top. And this is when things get very interesting. Okay, this is when things got very interesting because we didn't break our range low. We deviated our range low. Again, showing signs of that accumulation, right? Showing signs of a high time frame accumulation model being in a place that is crucial for the higher low, for the higher high to appear. Now, from there, we broke structure very aggressively back inside the range. We broke structure very aggressively. You can see right here, we were trending down, coming into that range low, and then we deviated and boom, look at this. Look at this. Study this V-shaped recovery. You can see the V when I try to draw my market structure. That is crucial to order and to identify strong behavioral market maker involvement because an only market maker can push price this aggressively. So when you see a V-shaped reversal like this, you have to ask yourself, guys, was the purpose of this move down to break lower, or was it to grab the liquidity and move back up? Now, when you have this strong of a V-shaped recovery and you break structure, obviously the whole idea and the whole purpose of the move down was to grab the liquidity and not to go lower, right? That's how people get trapped. On those deviations, a lot of people get trapped. So what could you guys expect when you had lower highs and lower lows and you break structure? What can you guys expect right here? A higher low for a higher high. It's as simple as that. It's the most basic market structure and it's the most effective. Now, this move up, I need you guys to identify this. Look at this. On this aggressive move up, we not only left behind one daily demand zone, we left behind two. I'm telling you guys, when you have a move up that leaves behind back to back daily high time frame order blocks, the move is very strong. And you do not want to try and short a move that is that strong. I'm not telling you to FOMO into any longs. I'm telling you to not try and short the short squeeze because that is what it is. It's a short squeeze. Okay. So we got the very aggressive expansion towards the upside, putting in that higher low in that exact ideal spot. And the funny thing is to me, when we actually identify the volume in this range, here you guys can see the volume. The higher the spike, okay, the higher the spike in the range, the higher the volume in that range. And volume is buyers and sellers. But where there is high volume, price has spent a lot of time there. There were many buyers and many sellers, and they tend to act as support and resistance levels. The highest volume spike is the POC. So right here, you can see all these different volume spikes, and the highest one is the POC, and that is represented here in this red dotted line. It's the POC is the point of control, the point on the range or in the range where the most volume is located. We spent and created that range at the POC where the most volume was. But not only that, our deviation, okay, our deviation of our range low right here bounced perfectly of the highest volume node next to the POC, which is right here. You can see that right here, that massive spike, and that's exactly where we bounced, which was overlapping with demand here. So it was the perfect place for the market maker to have many orders because, guys, a market maker pays a lot of attention to volume. Because if you want to fill massive positions, you need a lot of volume in that area in order to fill that. So when you see those high volume areas, those are areas where they are also looking. Okay, nice little tip and trick for you guys. But you got that perfect bounce from that high volume note, continuing that uptrend. And now, right here, we came into a very strong resistance POI. Okay, we came into a very strong resistance POI. I'm not going to lie, guys, this is a very strong POI because this was actually part of that Model 1 distribution we talked about in the 29th of July, where we got a very aggressive expansion towards the downside. And we're fighting that as we speak. The thing is, we swept almost all like internal buy side liquidity. You can see that last wick high right there. We swept a lot of buy side liquidity. I'm pretty sure for the people that have heat maps, um, you can see how much liquidity was actually swept on that move up, also giving the market makers the ability to fill shorts if they want to, right? If they want to. But we have to be aware that we are at a resistance. We are at resistance right now, and we are also deviating our volume area high. So the place to get bullish, guys, the place to get bullish was right here and right here. I'm not saying I'm turning bearish because there's no need to be bearish yet. We haven't broke any structure back to bearish. We've simply just been rejecting, but we cannot FOMO into any longs. Okay, we cannot FOMO into any longs. So we had many opportunities to get into longs. I posted about many long setups. It was harder to get into the second one because we only had one deviation, but right here, you had the chance to go for swing longs. This is not an area where you want to look for swing longs. It doesn't make sense. You're in premium pricing. And what do I mean with premium pricing? This range right here can be divided into like two sections. Everything in here is the upper pricing, and everything here is the lower pricing. And I call that premium and discount. You want to look for swing longs in discount, and you want to look for swing shorts in premium, right? So even though we don't have any bearish signals yet because we haven't broken any structure, we have to be cautious. Okay. You don't want to be full porting anything right now. So actually identifying how we came in there were some people who traded a nice little accumulation schematic, guys. I am not going to lie. Um, and I want to go into that real quick because a lot of people in the TCT Discord took the long, and I'm glad it played out. But guys, you need to understand context. You need to understand context when trading. So identifying that high time frame uptrend, we had higher lows and higher highs. And what this basically is right here is your new range. Okay, this is your new range right there. We have our range high, we have our range low, and then people, right, the TCT warriors, they did find a sneaky little accumulation long, which was definitely an accumulation long. However, I want you guys to be aware of where you were actually longing. Okay. So what happened is that we came into that range high and we created the range. We had a higher low and a higher high, range low. And then we had that deviation high or a range high, range low. And then we got that first deviation. And that first deviation also swept that main high right there, right? It swept that main high right there. And that's where you can see that pop up. Apparently, on the USDT chart, you had a very aggressive buy to sell. That is simply because there was a lot of liquidity above that point, causing it to spike because the stop losses got hit, and then probably someone shorted and filled their short position and reversed price back down. From here, you actually got a little model 2 distribution where you have your 1, you have your 2, and you have your 3. Okay. Now, the 3 wasn't tradable. It was also during Asia, so I wasn't awake for it, but there was no structure confirmation to short it. I told you guys that Also in the mentorship, that there's always a chance your distribution flows over into an accumulation. There's always the chance that your distribution flows over into an accumulation. However, are you looking for this distribution to flow over into an accumulation when you are deviating your range high? That is not having great context. When you have a higher low and a higher high, right? And you're in that higher low area, this is the place where you may have a distribution that goes over into an accumulation and you take it higher back towards this high. But you do not want to look for distributions flowing over into accumulations at the range high. And even though this worked, okay, even though this worked right now, over the long run, you will have more losses than wins because this was a special scenario. Okay. Right here, we had that one, we had the two, we had the three. Price actually came back for a proper model two distribution. So you could have looked at this from two perspectives. You could have said this is a model one that went over into a model two, a one, two, three, and then that four, model one flowing over into a model two. Or you can go on the 1 hour, you can go now more like the 45. You can go on the 45 minute and you realize that, hey, this is just one move down, one move up, one move down, one move up, and you can call it a high time frame model two. So you had like a high time frame model two slash a low time frame model one, and you did have some liquidity above right here. If we extend it, you did have some liquidity above right here, and the people took it on the breaker structure. So I'm so Loki, guys. I'm just it makes my day when I see you guys pulling out these charts. You have the white charts, you're posting that long. You're like, I got I got the accumulation, we got the model one, the model two. I'm like, man, you guys are legends. They're understanding the concepts better and better. And some of you actually took it all the way towards that um 68K area, which was amazing to see. And I'm glad it worked. And the reason why it worked is because we were at a crucial point. I let everyone know in the TCT community in the morning that we were at this crucial point in the chart where we're either going to reject and we're going to deviate or we're going to pop. And locally speaking, we got that pop, and there was nothing to stop price in this entire move. These were all just highs that were waiting to get taken. And that is also the reason why this move up was so aggressive. This move up was not aggressive because there were buyers. Okay. There were actually people buying. The open interest wasn't going up, probably. It was actually just stop losses getting hit, causing buy orders. Okay. So people that were short, their stop loss gets triggered, and that causes a buy, making price spike up. Now, this setup worked. I'm glad it worked for the TCT community, but I want you guys to be aware that the context wasn't ideal for the long. Okay. But I'm glad it worked for you guys. That's a nice little 4% gain under your belt, which will count up compounding very, very, very fast. Okay. Now, the thing is, this was a very crucial POI. We could have expected some sort of a rejection there. Okay. We could have expected some sort of a rejection. And that's exactly what we got. Now, whenever you have an aggressive buy and whenever you have an aggressive sell, what do you think price is going to do? Liquidity on both ends have been taken. We swept the liquidity right here. That was the liquidity sweep. We got the liquidity sweep right here. We got the liquidity sweep right there. What are we doing right now? Ranging. It's that simple, guys. You have two very aggressive liquidity sweeps. What do? You range. Price has moved up, aggressively down, and you kind of find that EQ of this entire move down, that equilibrium, restore the balance, and then you range. And that's exactly what is going on right now. So if we just follow that uptrend, because it was a wick, we had the higher lows and higher highs. This was a wick, so you're still in that uptrend. You pull your range from top to bottom, and this is kind of what you have right now. And I am extremely curious as to how this range is going to develop itself. I am so curious, guys, because this is a crucial area. This is a crucial area. A very, very, very crucial area. Because we kind of have a range, right? We have a range right here. Range formation. We have a range at the upper section of this bigger range. So basically, we're always ranging. Bitcoin is always ranging. You have an aggressive move, but it's all just a range. It ends up everything ends up being a range, and that's also why these TCT schematics work so good, right? But right now, this is very key. Now, my expectations, okay, my expectations. There is a great chance that we see, a move down towards the discount. Maybe we don't take that low, we get a break of structure, and we have some internal rotations before taking an extreme point. Now, it's very important to identify which extreme point is going to get taken first. If we're deviating our high first, those are signs of a distribution. And somewhat of a distribution does make sense regarding context because we're in the upper section of the macro range in supply after sweeping a lot of buy side liquidity. But I'm expecting some internal range rotations here. So price basically move inside of this range, and then we're going to grab an extreme point. Now, I have seen it before, right? I have seen it before where because this sweep was already so aggressively, we don't really have to sweep that high again, which would be unfortunate because those make the best plays, those sweeps off the range high. But it could be that we, come down and then end up just breaking down from this range before maybe finding our next support. Because, guys, even if locally speaking, this range breaks towards the downside, right? Even if this range breaks towards the downside, we left behind so much demand. We left behind such a strong foundation for price to come back to that you shouldn't be worried. You shouldn't be worried about. I don't want to hear any targets regarding 52. Like, I don't want to hear them. On this move out, we left behind such strong demand that we have to surpass a lot to break that, right? We have to surpass a lot. Even overlapping it with your volume profile. Look at this, guys. Look at this. You can literally see it. If I grab that ray again, right here we see our POC, and the POCs overlap with that first daily demand zone. And then right here, you can see that high volume spike, right? That high volume spike. And that high volume spike is also overlapped with our right here, second demand POI. So even if we break this range towards the downside locally, we left behind very strong demand, right? Now, if we're going to tap that demand, come up, and then maybe have like a 1, a 2, and a 3, who knows? It's just that, in my opinion, price is just ready. We're just ready. We can expect a reaction here. We have such an aggressive expansion towards the upside. We need to cool off, but this range has been one of the longest ranges in the history of Bitcoin. It's almost the longest range in the history of Bitcoin. I don't know if we surpassed it. I want to double check this, guys. I want to double check this. Let's check it. Because I figured that that longest range was all the way in 2013, right here. I think this was the longest range, no? Or I'm totally off right now. 216, until when did we break that range? Right there. From this low to that break, 288 days. That was your longest range because that was a clear defined range. Anything in here wasn't. So grabbing the chart here, 288, we're at 220. I am ready. I am simply just ready. Packs are loaded. Everything's just like, it's been too long. It's been too long. I'm guessing, guys, I'm guessing that most of you don't even remember, right? Most of you don't even remember what your life was before coming and entering to this range. Like, I remember because I went to Colombia for months, for like 2 months. So I remember actually coming back right on there, and I was in Colombia during this time. But most people don't even remember their life before entering this range. It has been that long, right? It has literally been that long. And that's the second thing I want to get into, right? That's the second thing I want to get into. Um, right before we get into that second thing, I want to debunk one more idea because I have seen people post about uh, this potentially being a distribution schematic like this, where this is your one, this is your two, and this is your three. I have seen these posts. Okay, these posts have been I've been tagged in these posts, The problem is I only use these time frames. Okay, all my data is gathered on these time frames. And the thing is, right? If we draw our structure from high to low, this is how it started. This was your range on the daily. We cannot just randomly ignore those points. Okay, we can only ignore these first starting points if on the higher time frame this is not structure and this is. So if this on the higher time frame is not and this is, then you can invalidate your structure. But if I go on the 3 day, if I go on the 3 day, this structure disappears, but we don't have a valid pullback. There's no valid pullback here because we only have one bearish candle. And for a valid pullback, you need two consecutive bearish closing candles. So that already invalidates this entire idea because this is just one move up right here. It's just simply one move up. And it's not any of those model one distributions. Now, someone did post a chart of the 2 day, but I don't use the 2 day. So I cannot give like my opinion on that because all my data is backed on these time frames and they work very good with structure. And I've never even had the urge to use the 2 day, right? So that's why I'm not a fan of this idea. Okay, I'm just not a fan of it. Not a fan of it, especially because if that was the case, I would have preferred if price came up with like this grindy fashion, which we didn't. We came up very aggressively, leaving one demand zone behind and two demand zones behind. So, not a fan of that idea. Now, regarding timing, right? Regarding timing, people need to realize and need to reflect back on their own behavior. Okay, guys, you probably don't even remember what your life looked like before entering this range. Be honest with me. It's very hard to remember what you were doing in here. It has been that long, or at least it has felt that long. And that's the crucial part. Okay, that's the crucial part. It has felt that long. I can guarantee you, right? I can guarantee you that the same time we spent in this range, around 224 days, let's say we leave it from here, we'll still be in the bull run at that time, right? We'll still be in the bull run at that time. So I want you to imagine this because this range, guys, this range has traumatized people. I remember friends, I remember other people on X, they were aiming right here, they were aiming for a 10x on their portfolio, 10x portfolio. Let's say their portfolio was worth 100 grand right there at the top. They were like, I'm going to write this portfolio to 1 million. And then their portfolio went all the way back down to 40 grand, okay, minus 60%. And right here, they'll say, oh, I aim for a 5 to 7x on the portfolio. So not only, right, not only did their targets change, portfolio, not only did their target of their portfolio change, well, the portfolio target did change, but not only the X's, not only the X amount changed, the total value also changed because now they're aiming for a lower X on a lower amount compared to the higher X on the higher amount. And the problem with these people is they're traumatized, right? They're traumatized. And the moment we start doing this and we get that first sign of weakness, that first local pullback after being in price discovery, they're going to think, oh, this is it. They're going to think, oh, this is it. And then what does price do? We consolidate and boom, we pump again. And trust me, those same people that were too scared, too afraid because they were traumatized by this range, those same people will buy back in higher. And that's when we actually start distributing and we go lower, right? Now, the thing regarding sentiment, this range has felt like forever. I want you to picture this right now. The duration of this range, where you don't even know what you were doing with your life prior to entering this range. Imagine that same duration, okay, the same duration, but then being in price discovery. Here, we're going to copy this. Imagine that same duration, but then price just being somewhere in here. Imagine that, right? Where's that bars to? Bars. Um, where are those ghost pattern bars? Oh, there you go. Bars pattern. So I'm not saying you're gonna get exactly this, right? But like, just imagine, just imagine the same duration, okay? But then BTC being in price discovery. Guys, I can already guarantee you, the articles you will see, the targets you will see will be so extreme, it's not even funny. You're going to hear about this being a super cycle. You're going to hear about different countries accepting Bitcoin payments. You're going to hear about different countries accepting Bitcoin as a store of value, calling BTC the new digital gold, calling for a 1 million Bitcoin by the end of 2027. Like, that's exactly what you're going to see. And that sentiment is going to last the same amount minimum as this range. Do you know how absolutely crazy that is? Retail is not even here. I don't hear people talk about Bitcoin. I only hear people talk about Bitcoin on my socials because I'm involved in the crypto space. My friends haven't even asked me to invest in Bitcoin. It's like, it's going to be so crazy. You guys need to understand time. You need to understand psychology. Understand psychology. The same time we spent in this range, that's the same amount minimum we're going to spend in price discovery. And it's going to be absolutely insane. With that being said, guys, we will be playing live on easy mode for the upcoming 12 months, okay? Until we have to sell, your whole portfolio will go up. No matter what token you hold, no matter what project you hold or you invest in, every shit coin is going to go up. You're playing life on easy mode. You're not that guy, right? Everything is going up. Everyone makes money, until people end up entering too late. But life is on easy mode in that time period. What I want you to do is I want you to already prepare for life when the bear market hits. Okay. And that is why trading is so crucial because with trading, we can stack up daily gains that compound. No matter when the markets go up, no matter if the markets go down, you compound your gains. You just need volatility, and that will always be there. If it's not in crypto, it will be in commodities. If it's not in commodities, it will be in Forex. What I want you to do is I want you to study TCT for these upcoming 12 months because you literally have been given the time. Your spot portfolio will go up. So learn to get a different skill that makes money. Learn how to trade, learn how to do anything. Just a skill that gets you money, that makes you money. You already need to prepare for that. You already did your job. You guys survived. You guys are still here. You already did your job in this accumulation model, right? You guys stayed, you guys persevered, you guys added more, you didn't panic sell, you guys did your research, you followed the right people, you listened to the right people, you trusted the right people. You've done your work. You need to enjoy the games now, and life is going to be played on easy mode. And that is the exact reason why I gave you guys the mentorship. The exact reason why I launched the mentorship right now is because life will be played on easy mode in crypto. Okay, you can just hold and make money. So learn a different skill. Learn TCT because you will not only be using TCT for daily compounding gains, you'll be using TCT to short the top. You're going to be using TCT to short the top. TCT is all about market maker involvement. And the thing is, guys, I made a crazy threat that went way under the radar. I made the craziest threat regarding market maker involvement, and you guys need to read that threat. I'm gonna search it for you guys right now because it didn't get enough views for the value it gave, and I want you guys to all be aware of it. It's right here somewhere. Okay, it's right here somewhere. It's why I will call the exact top based on here. Okay, I'm gonna bring you guys through it. This is why I will call the exact top in crypto this cycle. As many of you probably already know, I am Decomposed Trader, creator of the TCT concept, and I've given you guys the information needed to actually understand why accumulation and distributions work the way they do and how to effectively trade them. I have noticed a shift in market behavior over the past years on Bitcoin, making me extremely confident in predicting this cycle's top. So, Before I go in depth about Bitcoin's price action, I want you guys to understand a few basic concepts first. When an asset performs good over a longer period of time, it basically means that over time, more and more money is flowing into the asset. Now, understand that the more money that is flowing into an asset, the more money it will take to move that asset. And you guys can compare this, right, with just a meme coin project and the liquidity pool. If your liquidity pool is extremely low, you can pump price with your orders. If the liquidity pool is extremely high, it takes more money to move the coin. That's the same with just an asset. Okay, it's literally just the liquidity pool if you want to compare it to a crypto project. So you will see your accumulations, therefore, and also the distributions become more defined, take more time to develop while the percentage moves decrease. And we can compare Bitcoin to gold. Bitcoin's or crypto or gold's market cap is around 18 trillion. Bitcoin is around like 2. You can see right here the same accumulation model. You have a range, you have the manipulation, you have the move away. But this range took 1,309 days, and the move up was 66% in 700 days ish. On Bitcoin, it being like 9 times less the size of gold, we only need a 273-day range. And we went up 389% in 476 days. So that you now that you understand that the more money that is flowing into an asset, the more money it takes to move it, we can go into the actual pattern behavior on Bitcoin over the years. So observing Bitcoin's price action from the end of 2023 till 2018, we can identify the following. There was no, you can see, there was no proper high time frame distribution schematic. There was no proper high time frame accumulation schematic at the bottom, and we had a V-shaped uptrend. And this is very typical price behavior for a promising asset in its early stages. So you can see right here, I'm on the weekly time frame. It was 2013 the top, 2015 the bottom. We just looked at this range, how long it took. We can see there was no distribution here, and there was one accumulation, but it wasn't a valid accumulation, right? This wasn't a valid accumulation schematic. And from there, we literally had V-shaped market structure. You can see that market structure trend, guys. It has these V's, very aggressive sell to buys. Okay. You had this V. So this is typical behavior of a new project. Okay. No proper distribution, no proper accumulation, V-shaped market structure. And that extended itself going into price discovery. So all the way when we had that move up to 20,000, you can see we just had uptrends. No ranges on the high time frame, just an uptrend. Okay. Now, in 2018, it slowly started changing because we had a valid mid time frame TCT distribution schematic and we had a valid reaccumulation schematic, right? So you can see right here on the 6 hour, so the mid time frames, not the high time frames, you can see a Model 1 distribution. It was at the high, guys. It was at the high at 20K. You can see we were making higher highs and higher lows until we broke structure bearishly right here. And then you can expect a lower high for a lower low, and that lower high had a valid Model 1 distribution. Right here at 16K was your most obvious sign to get the F out of the markets. And then at the bottom on that Corona flash crash, that was nothing but a reaccumulation schematic with a 1, a 2, and a very aggressive sell to buy. So we did have a valid distribution and a valid accumulation. Okay. So you can see that we went already from just V-shaped moves to accumulations and distributions. And then everything changed in 2021. The asset becomes older, more money flows into the asset. It takes more money to move the asset. And when it takes more money to move it, more market maker involvement is required. And you can see that going into price discovery in 2021, we had range number 1, which was a valid accumulation. We had range number 2, which was a valid distribution. We had range number 3, which was a valid accumulation. We had range number 4, which was a valid distribution. And then we had a redistribution for range 5, but it was not a valid one. Okay. We just had a simple manipulation play, but we were already in the bear market at the time. But you can see the difference in price behavior. Right now, all of a sudden, on the high time frame, like the daily, we are getting those reaccumulations and those distribution schematics. And each one marked the pivot point off on the chart. You could have longed here, you could have de-risked some here, you could have risked on right here and de-risked some there, and you nailed the whole cycle by just understanding accumulation and distribution schematics that is available to you on YouTube for free. Okay. So not only did we have those clean looking ranges, we had a double top. So on the weekly time frame, on the high time frame, we had our range high and we got that first deviation. So we had all these accumulation distribution models while putting in a double top, deviating our initial range high right here. It's the ultimate market maker involvement. So you can see the more money that flows into the asset, the more money it takes to move that asset. And you can already compare that right here. We're at all-time highs, okay? We're basically at all-time highs. We tap that all-time high here and then we reaccumulate it. You can see more and more money will flow into the asset. Compare this range to the previous range we had when we were at all-time highs, right? It was right around here until we broke through. Guys, we may spend around like 1 to 2 bearish candles before pumping into all-time highs while having the same aggressive expansion coming into that previous all-time high as we had here. And now it already takes this long, right? Now it already takes this long in order to push into price discovery. We can see the market change. We can see Bitcoin become more mature. Literally, we can see Bitcoin become more mature. The most obvious, and I made this comparison yesterday in the live stream in the VIP Discord. I was talking about you can compare this Bitcoin to an old man in his 50s, and you can compare this Bitcoin to a young guy in his 20s, and both are going for certain sprints. Both are running a marathon. Okay. Both are going for like a certain distance. Now, sprinter one, he can just sprint for a long period of time, take a very short break, and continue sprinting because he's younger. The older guy can sprint a bit less long than the younger guy and takes way more time to rest, bro. He needs a cookie, he needs some energy drinks, and then he can continue again. And the young guy represents young Bitcoin, and the old guy represents old Bitcoin. Bitcoin is becoming older and older. Like, unfortunately, we were not there for Bitcoin to grow up, right? If we were there when Bitcoin was growing up, man, I wish we could have raised Bitcoin because we would all be trillionaires. But I witnessed Bitcoin right around here in 2020. That was my first time meeting Bitcoin, and since then it has just grown up so much, and I'm ready. I'm ready, even though it can be a bit emotional. I'm ready to see Bitcoin, you know, go out of the house, discover its own path. I have to leave him behind. He's old enough now; he can take care of himself, and we are ready for prize discovery. Right, we're ready for prize discovery. And even if I'm just looking at the charts, guys, if I'm just looking at the charts on the weekly time frame, you think that this is not going to get taken? I have never seen that obvious buy side liquidity in my life on the high time frame like this. Like, come on now. Come on. Check that difference. Check the difference. We sweep the low once, twice, 3 times. It's compressing. I don't know if I don't know if there's like a pattern for this regarding like actual trading patterns and not like accumulation schematics the way I do it, but like trend lines. I don't know if people like do something like this. Where is that line? I don't know if people do something like that and then like this, and it's like a I don't know what the fuck this is. Maybe people do something like that, and then they call like that this move up is going to get replicated, something like this. I don't know. Let people do their thing. We know it's a reaccumulation schematic, right? We know it's a reaccumulation schematic. We just have to be aware that you don't FOMO in when you're in premium pricing. Okay. And one more thing I want you guys to pay attention to, and I want you guys to actually note down is that right now in this range, I want you to pay attention to the fact that each range low deviation was on bearish news. Okay. Each range low deviation was on bearish news. Right here, I think you had, I don't know, the Mount Gox collapse. Right here, you have Bitcoin or Germany selling Bitcoin. Right here, you had the Japanese stock market collapse or liquidation, you name it, right? All these moves had bearish news. You will be seeing the exact same, but then the other way around when we're arriving at a range that could be our distribution top. On each move up, you'll see a new macro bullish news events of, I don't know, Random BlackRock, Larry Fink, just Larry Fink saying random shit. Michael Saylor calling for 1 billion Bitcoin by 2023, 2032. I mean, it's like you'll see crazy bullish news, and you guys know that hey, news is literally a form of market manipulation. Many people don't realize that. Many people will call you a conspiracy theorist. Many people will call you literally a conspiracy theorist, but like news is manipulation, okay? Because why? Tell me why, okay? You can literally go online and you can watch two interviews with Larry Fink. Right here, right here, he called Bitcoin worthless and trash. Right here, he called it the new gold. Where do you think Mr. BlackRock has been buying? Right here or right there? It's so obvious, guys. It's so obvious. I don't know how people can take those people like seriously, right? Because it's too obvious if you just watch it and don't just believe everything you see on your social media feed, right? Don't believe everything you see on your social media feed. So let's put this back on our chart. And guys, give me some altcoin suggestions. I'm gonna do some altcoins for you guys because anyone that is still up grinding behind the charts, you guys deserve your project to be spoken about. So hit me with some altcoins. Hit me with some altcoins. Brett, I'm so ready for Brett. Caspa with, okay, I'm going to start from the top. I'm going to start from the top. So we're going to start with because I have been seeing some bearish posts regarding okay? With USDT. Oof. Yeah, okay, guys. Oh, my. Oh, this is a tricky one. Okay, this is a tricky one. So what we have, we're going to start from scratch. Okay, we're going to start from scratch because maybe we even have a swing trade coming up. And that was very weird today. There were many coins that were like, there were many altcoins that were looking bearish, but BTC wasn't looking bearish yet, right? But simply our high time frame structure on WIP is we have a high and we have a low. We don't know if it's going to be a higher low for a higher high. In order to confirm that, you need to break your structure from bottom to top. So it's very simple, very quick lesson again on market structure. When you're in an uptrend, you have to break structure on the lower time frame between this move down that will be looking something like this. Whenever you break that structure back to bullish right here, that's when you confirm your rotation back up towards that range high. And that's why I'm also talking about how that TCT mentorship on YouTube is so crucial, not only for day traders, but also for swing traders and investors, because they will just give you the good entries. You'll know how the market flows. So right here, our red market structure is higher low and potentially a higher high. But this higher high will only be confirmed if you break structure from top to bottom. That is black. Okay. So if you break that high, you will have a rotation. If you break that high, you'll have a rotation all the way back up towards your all-time high. That's just how it works. Now we have a big problem, guys. We have a big problem because we're wicking it. And what did I tell you guys about wicking? If you wick your high and you break structure from bottom to top back to bearish like this, you can have a full range rotation back down towards this low. So now knowing those literally those simple rules, we had a range right here where our range high was actually our market structure high as well. And we had some sort of an accumulation model. We had a 1, we had a 2, and we had a 3. But what do you guys know about accumulation model? The target of an accumulation model is literally the range high. Anything extra is just extra juice, okay? Anything extra is just extra blessings, but the technical target is that range high. Now, what we're seeing right now is price. What we're seeing right now is price coming into that high with bullish market structure. However, this is not bullish market structure. This could be a potential high time frame model 1 distribution schematic where you have your range and you have your range high and you have your range low and you got that deviation 1 here and then you got that deviation 2. Boom. When do we confirm the distribution? If we have a structure break between this is tab 1, this is tab 2, this is tab 3. This is the lowest point between tab 2 and tab 3. Our market structure applying the 6 candle rule is high, higher low, higher high. If we break this low, guys, which is something we're doing right now, we can have a potential rotation all the way back down. Okay, all the way back down towards our range low, which would be a 23% move down. Oh man. Man, oh man. Let's identify this a bit more because maybe I actually want to swing short this. Maybe I actually want to swing short this. Oh man. And we're back inside the volume profile. Oh boy. Where is your do you have support in here? I'm literally, guys, I'm looking to potentially swing short this. I'm not even kidding. Especially as a hedge. This is that first demand POI. You got nothing but liquidity here. You got 1 little minute, 50-minute block, but that's not that significant. You got also supply up here, but I don't want price to come up there, but it could. It could. That in that case, your model 1 will be something like this in a model 2. But right here, you technically speaking, you haven't broken your high time from structure yet. The high time from structure here is 6, 8. Let me see. It's an 8 hour. If you close an 8 hour candle below that low, preferably also deeper, um, that could be a swing short. So what you want to see for a swing short is price come down, potentially even to this demand zone right here, that little 15-minute block or 45-minute block, come back up, and right here you get that distribution schematic. If you get a 1, a 2, a 3 in here, it's the most easiest trade you'll find. It's literally the most easiest trade we'll catch with crazy risk to reward. Absolute crazy risk to reward. And the reason why I don't want to come to that upper one is because we just broke back inside our volume profile. So it's like, why break back inside our volume profile to leave it again to come lower? We do have very good looking liquidity there. We do have very good looking liquidity. But if you were asking me to chart with and be bullish, I can't be bullish right now on with. Not with the chart looking like this. Oh man. Oh man, no. No, no, no. Okay. Wait for a high time frame close lower, or guys, if you understand that advanced market structure, if you see that this low is wicking, but you still get that easy looking or good looking distribution here, you know a wick can be temporarily, and your market structure here is not broken until that high. So if you don't break that high and you get a distribution, you can still trade it because you know once you break that low, price will come back to this low, and now there's nothing to hold price up for that easy move down to 2.35. Okay. So, yeah. Oh, you even said distribution. You even said distribution, Babalola. Damn, what a name, Babalola. I like that name. But yeah, I cannot be bullish on width. There's no way I'm bearish. I'm bearish on width. Especially if Bitcoin is at a crucial area on the chart, right? Especially if Bitcoin is at a crucial area on the chart, a crucial resistance area. Not saying BTC is going to dump, but if you're at a crucial area of resistance on Bitcoin and your altcoin looks like this, you know, I won't be looking for longs. That is one thing. Okay, that is one thing. So we can put that on our chart, and you can wait for signs of weakness, and you can short it all the way down to that low. Take your first take profits here and then target the range low. And guys, if you want to know when I exactly enter my trades, which pairs I am looking at, when I'm confirming a short, whenever I'm doing anything basically in the trading game, also on commodities, also on Forex for you guys also to pass funded accounts, I am located in the TCT trading community. Okay. Go to tcttrading.com. We have our website right here. You refresh it, you join it. You can see right here the TCT website. You can join the VIP or you just join the free community. You click on the free community and you'll be sent to the Discord server. Okay. Where already like almost 300 members are located, absolutely smashing it. Guys, we are not just smashing it in the Discord server regarding the charts. We are smashing it in every aspect in life. We're really focused also on personal development, going to the gym, doing meditational sessions, not together, but promoting meditation and, going to the sauna, eating clean foods. Like, I really love the community that we're building in there. So if you're someone that just wants to, that just wants to level up in life. Like crypto is one thing. Yes, you can make money in crypto, but is that all you want? No, you want to be fit, you want to be in shape, you want to have a strong mental mind, you want to have everything, right? So just join a community of like-minded brothers doing that, okay? Because there are a lot of people like you striving for the same thing, and especially crypto, especially trading, it's a very individual thing to do. And it can be very lonely. So if you don't want to be lonely, you want to have a brothers who also motivate you, who also keep you accountable. The TCT community Discord server is where you want to be. Next, let's get into Caspa. Let's get into CAS USDT and let's check because I have been giving Caspa a hard time. I've only been posting distributions on Caspa. So I haven't been that nice to Caspa, but you can already see my TA. I haven't changed this TA ever since we were topping right there in August. So that's for like over 2 months right now. And we had this high time frame distribution model one. So the red dot represents our high time frame model one distribution. And this is like a guys, this is like a weekly time frame schematic, right? This is a crazy high time frame. Now, in that third tab, okay, in that third tab, you had your own Model 1 represented in the blue dots. Now, guys, in the VIP Discord, we also have private lectures. And for the people that have seen those private lectures, you guys know what I mean when I'm drawing this, okay? There is nothing in here to hold price up. You have to return to zone. There's nothing here to hold price up. The moment, right? The moment that you close below this market structure low, a high time frame candle close, you will have a rotation towards this low. Minimum, okay? Minimum right here. Minimum. If you close below that daily low, a high time frame candle below that daily low, man, you are going to be having a rotation down to at least 0.09315. The reason why I am not saying this low yet is because I don't know what this wick was. Maybe it wasn't a bug. Maybe it was a crazy liquidity exchange sweep. Maybe something went wrong on the project, causing this massive spike. So maybe that's not the actual low it's supposed to be. But these equal lows right here will definitely get taken. Okay. But we do have a line in the sand. Okay. We have a line in the sand. And that is that the same way that this distribution had that local 1, 2, 3, right? That 1, 2, 3 on the blue dots, you guys know by now that a distribution can flow over into an accumulation because we also have a one, we have a one, we have a two, and it could flow over into three, trapping people potentially into thinking we're going lower and then reversing back up. Because if we check our volume profile, that volume area low is not even located right there. Oh, that's new. That's new. I swear it was. Yeah, as you can see right here, that's new. The old volume area low was actually right there. So there's still high volume there. You can see right now the volume spike is still there, but the percentages have changed and therefore also causing the volume profile to change. But if you just push it back ever so slightly, you can see it just changed. It actually just changed. But this is your hope. Okay. This is your hope right here. And then off to the races we go. If that doesn't happen, guys, you're coming down here. Minimum. Okay. So let's do some bread. Guys, if I'm gonna talk about Brett, if I'm gonna talk about Brett, I have to give a shout out to the one and only Wyckoff Insider because this guy has called almost every move in the every high time frame pivot point move, and he literally longed bread with all of you. Okay, he longed bread with all of you, telling you when to enter, telling you where he entered, how he entered, why he entered, his targets. He absolutely nailed that trade. And right here, you hit that first TP1, right? So what we still have a massive liquidity curve right here on Brett. I'm very heavily in Brett, guys. Right here was around my entry on that first flash crash. I missed the initial move up. I got in on that FUD move, but you got that internal one, internal two, and internal three model two accumulation where that first target, or actually the initial target, is your range high. That's the target. Anything beyond that range high is extra. It's a blessing. But when we're trading TCT schematics, your range high is the target. Okay. Now, we went towards that range high and we actually deviated, breaking structure back to bearish. So first we SFP'd our market structure low, and now we broke it back to bearish. And you can see the difference, right? That right here, all our altcoins were looking bearish, and this spike up is the spike up on Bitcoin coming here. And that's why I was so confused, right? Because Bitcoin was moving up, but all your alts were bearish, and the move up on Bitcoin was just a lower high on most altcoins. So we do have that break of structure, and we got the lower high for the lower low. Now I'm checking where are areas of support. Where are areas of support on Brett to look for potential bounces? The most obvious one is right here. This is the most obvious sell to buy right here. Most obvious sell to buy. You can see that V shape, leaving that fair value gap, leaving that inefficiency right here. Boom. There is that fair value gap. Making this also a valid order block. And probably if I look at the volume in this range on bread, it will be around that POC. Look at that. So in that demand zone, we have the POC. And right at the top of that demand zone, we actually got that very high volume note. So this is a massive area of support. Now, I have to say, guys, if you do not bounce from that demand POI, I do think you're sweeping all of this liquidity. Okay. I do think you're sweeping all of this liquidity if you do not bounce from that POI, because below that, I do not really see any, any order blocks. Oh, we do have one right here. We do have one right here, but it is a lower time frame one. But if we lose that low, I kind of want to, or not low, if we lose this demand zone, I kind of want a move in here. Otherwise, you'll be bouncing from like a trend line, which is something I don't want. That will be very ugly if you have like 1, 2, 3, and you go. Like, I don't really see that happening. I'd rather take the trend line. And guys, I have still limit orders below this low. I have limit orders scaled like this. I'm very happy with my bread position. I'm only going to add more if we get that deep of a retrace, right? I'm only going to add more if you get that deep of a retrace. But for now, we do got that range deviation when Bitcoin is at a resistance POI. So we can expect a pullback here, but a strong demand zone is right here. And the top of that is 0.093. Dave, I'll be coming back to your low cap Snowfie. Okay, I'm gonna try and check the high time frame or the bigger caps first. CRV. CRV. Let's check what this coin has in store for us. Oh, I think I actually posted about this once. I posted about this once with the chance of this being a PO3. Yeah, so what I was initially thinking, right? What I was initially thinking here on CRV is that you had this, bro, you had this macro downtrend of lower highs and lower lows. Okay, lower highs and lower lows. When we're trending down, you pull your range from bottom to top. Okay. And what you could see right here is actually your range low getting deviated. So you had your one, you had your two. After that deviation, okay, after that deviation, you can see we got another deviation indicating some sort of an accumulation model, but we never broke structure back to bullish, right? We never broke structure back to bullish. Matter of fact, after that deviation, we created a range right here and we got a distribution, a one, a two, a three while having no price action in the discount, having therefore a range inefficiency because there's no price action in the discount section of the range. And that's why this is an easy fill. Okay. That's why that's an easy fill. So this distribution, this accumulation, it failed. Now, whenever you have a failed high time frame accumulation model, you have to be aware of the possibility that this range turns into some sort of a PO3, where this is your range. Okay. That's your range. And let's extend that range low to that low of the deviation right there. And then the next range that follows could be the manipulation. Put that text below before we have that expansion towards the upside. This is definitely possible. Okay. And the reason why I talked about this is that at the moment I was talking about this, we actually got this beautiful model one accumulation model. This one, this two, and this three. Like, guys, I can pull up any chart and I can show you an accumulation or a distribution model. And it is because it's not a strategy. TCT is not a strategy. It's understanding how markets flow, how money flows, the things price needs to do in order to actually move. If you want to move an asset, you cannot just randomly buy $1 billion of that asset because you will mess up the whole chart. They cannot fill their positions. They need to manipulate price in a way to move it. So a market always moves, and only a market maker can move the market. So there's always market maker involvement. So understanding the TCT concepts, you'll just understand price, right? Now, instead of having the strength and having the follow through to break past this manipulation, get that back test, and just blast off, we deviate our range high. We deviate our range high right here, got the one, got the two, kind of even equal highs. And this right here is looking pretty dead. This is pretty dead price action. So I don't know. I'm not that excited right now about CRV. If I had a long from the low right here with a break of structure, I'll just put my stop loss to entry and let myself get stopped out if that happens. A bullish scenario would be to turn the local downtrend into some sort of an accumulation model, but I can already tell if I go on the low time frame right here, if I go on the low time frame, what is this price action? I'm on the daily time frame. If you're watching CRV on this low time frame, you did nothing for 2 weeks. Like, this is absolutely garbage. Okay. No good volume, not that interested. I don't have a position in CRV as well. I was looking for a long, but I was a bit late to the party right here, and did not manage to catch it. The one thing I am pretty excited about is the volume, because look at the volume that has been coming in that manipulation phase, right? I don't know who is manipulating price right here on the Bybit exchange regarding CRV, but this is some crazy manipulation. That's some crazy volume, guys. Compare the volume in that tight of a range compared to this entire price action's entire existence, right? This is some crazy. They're doing something here. They're doing something here. So when everything pumps, this could just pump with it. Let me see what you guys have to say. I'm just scrolling through you guys. Hey Lars, much love from Brazil. My love back to Brazil. What is up 100 XGK? Remember selling that shit above 19 cents. People call me crazy. I think you're yeah. That was different. When everything is going up, you can make one post about thinking something is a distribution and people will call you crazy. Doesn't make any sense. I'm seeing a lot of Andy and I'm seeing a lot of Wolf. I see some Tau, but I'm seeing a lot of Andy. So let me do Andy first. Let me do Andy first, okay? I cannot not talk about Andy. Like, come on now, guys. Study this. Study being unfazed by any down. Study being unfazed by any market movement. Okay. Now, as you guys know, on the high time frame on Andy, right? On the high time frame on Andy, we have higher lows and then we have higher highs. Okay? That is basically it. Higher lows and higher highs. Now, I think I made 100 posts about Andy talking about that people will be too afraid to buy coming into this extreme demand, thinking we're going to lose this low, and basically having the exact same pattern play out right right here compared to right here. So, what happened right here? At the moment in time, this was your market structure low. On the low time frame, you had demand right here backing up that market structure low. Coming into that demand, we had a range formation. And right here, you had a one. Actually, on the low time frame, you had a one, you had a two, and then you can make it a accumulation model two. If you actually go on the low time frame, you count this as your tap. But we basically had an accumulation model coming into that demand, which was our extreme demand, and people were too afraid to buy because they thought we were going to dump down, we're going to lose our main structure, and everything is over. And then because of that manipulation, we pumped around a 7x. Okay, this was absolutely nuts. It was around a 7 to 8x, and exactly here on this arrow is where I first knew about Andy and when I first got in. What did we do, guys? What did we do again? We played the exact same playbook. Okay, we played the exact same playbook right here. We came into extreme demand. We created a range. You had your range low, you had your deviation, you had that higher low. The whales were literally holding price here, accumulating, showing signs of a high time frame model 2 accumulation. It was picture perfect. And from there, we broke outside of the range. And then right now, we back tested our range high that was being overlapped by our local daily order block. Okay. Now, guys, I told you one thing earlier about basic market structure rules. If you're trending down and you break it back to bullish, what is expectational order flow? A higher low, right here, a higher low for a higher high, right? What if you add this to it? That high time frame market structure pool we were talking about. Well, then we know that this higher low right here and that breaker structure right here confirms the move up to here. Okay. It's those basic market structure rules in lecture 1 of the mentorship on YouTube. So if we're going to apply that to Andy, okay, I'm just keeping it as simple as possible. You have higher lows and higher highs, higher lows and higher highs. Boom, massive move up. Okay. That's our high time frame structure. Our low time frame structure is looking something like this from top to bottom. You can see it right here. Oh, would you look at that? Would you look at that? This break of structure right here, this break of structure confirms the rotation back up towards that high. It's simple market structure rules, right? And the beauty of the accumulation models is that you can actually enter before having that break of structure right here, because right here you got the signal to go long regarding the accumulation model, and then you take it into the range breakout. So you don't have to FOMO back in here. A lot of people are too afraid to buy and they don't understand the accumulation models. What they will do, they'll wait for the breakout structure, they enter on the breakout structure, but then we had such an aggressive move that we can expect a cooling off slash a retracement. And the people that buy at the highs after confirming the high time frame break will immediately be in drawdown. They'll be too afraid to sell, and they'll sell simply in a higher low for a higher high. Now, where this higher low is going to take place, I don't care. Right here was the most bullish option, but we could also come back right here where we have, let me delete this. We could also come back right here where we left behind this, literally this market maker order block that is also backed by volume. Like I am telling you, you will not see Andy go lower than this block right here. Um, and those are your two retracement areas to add if you want to add. But people talk to me about I want to add to Andy. I want to add more to Andy. Where were those people when we were accumulating? We were literally accumulating right here. That's when you need to add. But again, some people don't have the conviction of the project. They only have the conviction when the market is going up. But if you only have conviction when the market is going up, that means you will lose your conviction when the market is going down, causing you to miss out on gains because you exit on the first signs of weakness. Okay. And that's not what you want. That's not what you want. Okay. So these are my plans for Andy. If we come here, I'll add more. But guys, I am disgustingly overpositioned on Andy. Yo, it's not even funny, guys. It's not even funny. It truly, for me, it started as just a joke. I was just buying Andy here. I wasn't really into memes at the time in May, and I was just buying Andy because my buddy told me to. And then I saw the data. I discovered Max. I did the research myself, and I'm like, I got more conviction, I got more confidence in holding Andy than holding a fucking gaming AI project. I felt more secure holding Andy than other projects. And the chart is just so clean. The chart is so clean. I love this project. And it's not just me liking it, it's not just subjective. There is nothing to dislike about this project. Look at the charts. Higher lows and higher highs, massive return to zones, good accumulation models, and it expects smart money concepts. What else do I want for a project, right? With the narrative it has, this is a massive runner this cycle, 100%. How do you look at the Uniswap chart on TradingView? You can just type in this ticker, just type in Andy, and you get this one, and you can just press it, and then you can chart it. It's not for every chart. It depends if TradingView allows it. Can you chart Wolf? Yeah, so Wolf was actually a bit different. Wolf was a bit less good regarding the accumulation model because we had lower highs and lower lows, and then you pull your range from bottom to top, and you never had a proper primary high time frame accumulation model, but you did have one right here on the lower time frame, which was also already enough. Sometimes that happens because the move down can be that aggressive because of panic selling. It wasn't actually meant to go there, and price will not revisit that. But you can see right here on the lower time frame, maybe not on this chart actually. I remember on the other chart, maybe not on the MEXC chart, but on the main chart on DEX, you can actually see an accumulation model here with a 1, a 2, and a 3, and that was your sign to buy. And the same right here, you have a range break. Expectation of order flow after a range break is that higher low for the higher high, right? And we bounced right here from that overlapping demand. Did we bounce from there? Let me make sure actually. No, so we didn't. We didn't mitigate that. What is it? 6. Yeah, on the lower time frame is kind of double. On the lower time frame is kind of double right here. Let's delete this. Let's put that back in place. And you can see the support that we're getting. Now, mind you, locally speaking, guys, locally speaking, we have a range high deviation. Okay. So we do have signs of a distribution in here. We have to be realistic. We do have signs of a distribution. This could be a model 2 distribution right here. This could be a model 2 distribution. Your liquidity is also curving up. I don't really trade these coins, so I don't particularly know their pattern behavior for like literally local entries, but we do have a model 2 distribution. So let's identify our structure. This would be your main low. This would be your main low, and you already locally have the candles are trash, but you already have some sort of a break here. Let's check our volume profile. Yeah, so this could come down. This could come down. How much percent is that? Around 29. We do have a Model 2 distribution with a break that is back inside our volume profile. The safer break is right here to wait, but this is already enough, technically speaking. And we do have that return to zone. So we could be seeing a move down here, but expectations for me would be for this distribution to flow over into an accumulation model. Okay. Where this distribution goes into a 1, 2, 3. Now, guys, before you start asking me, okay, before you start asking me, should I sell some spot to buy back lower? No. My advice is not. At this point in time, at this point in the market, you're way riskier of not being invested than being invested. And even me, as literally someone who has made a living out of trading, I do not trade my spot portfolio. I trade leverage on my trading accounts, and the money I make, I just add more to spot. Okay. I just add more to spot. It is crazy hard on your psychology, even for me as an experienced trader, to sell spot to buy back lower. If you can do it, it's fine. I'm not a fan of it. I'm just not a fan of it because you can see the market go up before coming down. I am Loki also a terrible uh swing leverage trader. I'm way better as a scalper. And you as a trader, you have to know your strength and your weaknesses, right? I'm way better as a scalper and to find my scalp entries that turn into runners than just staying on the high time frames and trading only the high time frames. So no, I would just literally learn how to trade, catch some shorts if we do get that move down on other altcoins, and with the money you make from those shorts, you buy back. That's simply what I'm going to do. Okay. But the feeling that I have, okay, the feeling that I have, despite this potentially being a distribution and we might come down to that region right here, the feeling that I have regarding Andy and regarding Wolf is like the moment the market bounces the slightest, like the moment your majors bounce for the slightest form, your Andy and your Wolf just explode. Like they just explode. And it's like I really get this feeling that these coins are only being held back by the market. Like the demand for these coins is so high. Every pullback gets just bought up. Every moment there's green light from the majors, they just pump. So the moment the green light of the majors is actual green light for price discovery, these coins will go absolutely bizarre. What a word, bizarre. But yeah, we do have signs of a distribution here. Don't be worried. Even if we do get that move down, just look the app more on signs of strength, obviously. And then you should see this as a blessing. Tau or Hoppy. I see a lot of Hoppy actually. I see a lot of Hoppy. Is Hoppy also on TradingView? There you go. I've been seeing many posts regarding like the beta of the beta of the beta of the beta. But I haven't really looked at this chart personally, so I'm actually pretty curious as to what it has got in store for us. So we were trending up right here, and we had a very aggressive expansion towards the downside, but we wicked our low. We never broke that market structure low, right? We never broke that low. And we didn't have a proper accumulation schematic here on Hoppy because you never took that initial range low, right? You can see the trick here, guys. You can actually see how tricky this is because you had a 1, you had a 2, and you had a 3, right? That's why I'm always curious. You had a 1, you had a 2, you had a 3, and you had to return to zone. So that's why I'm always like, be careful with selling spot on your portfolio because if a project is just ready to pump, it's ready to pump. Now, obviously, this was a distribution with no good context because you were, just recovering from a 84% retrace. So that's not really when you when you want to look for massive shorts. But you have to take this into account that they do fail when the market is just ready to pump. Okay, they can fail. So therefore, selling spot to buy back lower is just not going to be worth it. Okay, it's not going to be worth it. But right here we got a very aggressive move up. We got a very aggressive move up. So following that trend, making higher lows and higher highs, this is basically what you have. Did we take that high? This is literally an equal high. Okay, that's an equal high. Yeah, we're basically ranging, guys. I don't have that much to say about this project. We're basically ranging. We were uptrending, we wicked our low, we never broke it. Then we had a fake distribution range right here that broke towards the upside. And now we have a range that has no deviations yet. So this range is pretty neutral. Okay. This range is literally just a range. Now, can you expect some range rotations in here? 100%. How much would that be? Also a 25% move. So be aware of those percentages. Okay. Be aware of those percentages. But there's not that much that I can add to this chart. You're trending up. This is basically it, right? You were trending up. You wicked your low. Now you're moving up again. This is what you have. If you want to add spot because you have conviction, wait until prices in this region to scale in. You don't want to be scaling in into premium pricing. You want to be scaling in into discount. Even okay, guys, listen to me. Even if price pumps, okay, you rather want to buy on the retrace of that pump, even if it's a bit higher than that initial entry right here, than buy in just a random upper pricing area. Okay. Because right here you have conviction because you have more data that we're going to leave that range and we're back testing it. But don't randomly buy in premium pricing. That's all I am going to say. Okay. Let's do one more. We have been streaming for an hour and 40 minutes. Guys, I'm going to do one more, okay? I'm going to do one more. But me and Wyckoff Insider are located inside of the TCT Discord. Again, we have a free community and a VIP Discord. There's so much alpha in each one. You join it, and we'll have in the VIP, we have live streams every single day. A morning one hosted by Wyckoff Insider. During New York Open, we have one hosted by me. And also, we're going to be streaming way more to the public as well here on X and YouTube using this new stream layout. So it looks so clean, to my opinion, guys. It looks so clean, no? This layout, this streaming layout. I love it. So we're going to be hosting also more public streams, but just for daily alpha, for daily activity, daily updates. Just join this community server. It's bro, they're just straight up warrior individuals, like brothers. Literally, I absolutely love it. I go to the gym, I post my gym pictures, bomb. Everyone is hyping each other up. We're aiming to be better mentally, physically, financially, spiritually. It's an amazing community. I love every single one in there. And I want to see you guys in that community too. Okay, I want to see you guys in there as well. Now, let's do one more. Let's do one more. I'm debating. I'm debating between Tau, Bobo, or Mumu. So literally, the first one I see as a new comment will be it. Tau, Momo, Mumu, or Bobo. Tau, Mumu, or Bobo. First comment I see is gonna be it. I'm checking the comments, guys. Tau. Okay. Okay. Tasty is fast. Oh, and Dragon wanted as well. Okay, let's check Tau. Let's check Tau. I think Tau has been performing like crazy. Oh man, let me get a chart with more data. Let me get a chart with more data. There you go. Boom. MEXC has the most data. That's new. Okay. So, guys, when we are talking about accumulation models, I don't think we have seen this clean of an accumulation model at your weekly market structure low. Right here, oh man. We swept that weekly market structure low, right? We had a perfect high time frame range with your 1, with your 2, with your 3, and then right here you confirmed that break of structure. Boom. Break of structure. Okay. What did I tell you guys about general order flow? When you have that break of structure on the low time frame, that confirms the move up towards the high time frame. Guys, swing trading is so easy because it takes so long for the moves to happen, so you can prepare so long in advance. Okay, it's the best. It's absolutely the best. But yeah, you had that high time frame accumulation model, and we broke up. And man, oh man, did we break up aggressively? We broke up so aggressively, bro. It's not even funny. Like, this is absolutely crazy. We have all this liquidity here on the left. 1 second. Okay. We had all that liquidity on the left. That was swept very easily. And now we must have come into some POI right here of this massive wick. This wick on the lower time frame is basically a massive buy to sell. Okay. It's a massive buy to sell. So I kind of define or refine my supply zone to the wick that's still not mitigated. So this wick kind of mitigated that wick partially. I'll move it up so I have a wick that's totally unmitigated, and I'll use that as my supply. And that's also exactly where we rejected from, which is normal. Look at the aggressive expansion, guys. Like, if anything happens to Tau, you will literally be getting a higher low for a higher high. No matter where this higher low will take place, it will be a higher low for a higher high. I'm telling you with 100% confidence. Okay, that's just how it works. Now, let's check how we have been coming into that supply zone. So we are seeing signs of a distribution. So following my daily market structure, you can see we're making higher lows and higher highs. And you pull your range from top to bottom, and you have your range right there. And you got your 1, you got your 2, you got your 3. Now, it's not it's not a very good looking one. I have to be completely honest, it's not a very good looking one just because it's very V-shapery, right? It's not really a range, it was more market structure. I would have loved a bit more sideways price action in between the deviations like this, but we didn't really get that. We got no sideways price action in between our deviations, so it's not the best looking distribution, but it is at a crucial area on the chart. So right here, we broke our market structure. back to bearish, but we are in some form of demand right now, right here. So this is basically what we have. We have some sort of a Model 1 distribution schematic. It's not the best looking one, but it is one. We have good looking demand right here, and we came down leaving buy side liquidity. And I'm gonna be honest, guys, MEXC has not been really um, accepting the distributions. Almost every distribution ended up turning into an accumulation. Here's a prime example: you had a one, you had a two, you had a three, and it turned into a one, two, three. You just go higher and then lower for a higher time frame: one, two, three. Right. So there's really been accumulation focused, um, but we have some sort of a distribution right now. I will not be shorting this. I will not be trading this, but you can potentially expect a rotation towards that range low. And from there, we can start some sort of an accumulation model before potentially going higher, or we lose our range, okay? Or we lose this range and we kind of start a new range in here, okay? And this is kind of its own range that's going to play out, and you get a new range in here. But this is a very good looking POI. This 44 or 40 434 slash 35 area is a good area to add to your positions on any signs of strength. It will probably also be in that deviation threshold of this range. There you go. Like this right here will probably be a good place to add if you come there, okay? And if you want to add tau. So guys, I've been streaming for almost 2 hours. We have been killing it. Low key, there's so much more I can talk. I can talk literally for hours and hours, but we're gonna spread it out over the days. I'm glad I figured out how to do all this streaming stuff. I'll be coming with a schedule together with Wyckoff Insider on how we will be managing the public live streams as well. Preferably, we're gonna rip one out for you guys every single day. And it's time to take over mentally, take over financially, take over spiritually, take over physically, level up in life. The upcoming months will be on easy mode once we are in price discovery and your whole portfolio goes up. Learn another skill, prepare for the bear market, prepare for that life, okay? And I'll see you all in the next stream. And don't forget, TCT community on the tcttrading.com website. Love you guys. Peace.